Trust is incredibly important, and I always say that we build, trust one drop at a time, and we lose it in bucketfuls. And welcome to the Freedom Point Real Estate Podcast, where we talk about creating more time freedom through passive real estate investing. Passive investing in real estate challenges conventional investment wisdom. We are passionate about learning and sharing resources with others who are ready to transform their investing mindset. Quick disclaimer as always, I am not a CPA, I am not an attorney or a financial advisor. This is not financial advice, not telling you or anyone else what to do. The views and opinions expressed in these podcasts are provided for education and informational purposes only and are not necessarily the views of my employer. I'm glad you're here. Now let's dig in. All right, welcome back, Freedom Point Podcast listeners. Thank you again for jumping into yet another episode of the Freedom Point. I'm so glad you're here with us again today. I've got another amazing guest, Jeff Ervick. Jeff, welcome to the show.
Hey, Jeremy, appreciate it. Thanks for having me on.
Yeah, of course. And I'm looking forward to chopping it up with you today. Jeff is an accomplished real estate operator and investor relations maverick. He's successfully deployed over $40 million of equity into a $160 million portfolio of assets under management and development today. Most of this portfolio consists of multifamily, luxury, single-family homes, ground-up development, and flex industrial projects. Jeff, really appreciate you being on the show. And I also appreciate the fact that you are doing what I preach, and that is diversifying into multiple different asset classes. As a limited partner investor myself, I take the same approach. But before we kind of, dive into the details, I'd love for you to tell us a little bit more about, yourself, your journey, what you're focused on today, et cetera.
Yeah. Oh, Jeremy, I appreciate it. Thanks for having me on. And that intro sounds really, really too good to be true sometimes, right? But it's wild what's happened in the last number of years. So I've been in real estate since 2017. Started out with some single family rentals, did a few flips, ended up getting into private lending. So I was doing that. I still do that now. In fact, I'm an investor in a hard money lending business here in the Baltimore, Maryland area, even though I don't live in Baltimore. But we end up doing that. And then, I still work in a W-2. I'm a tech sales, right? So, through that avenue, I was looking at how can I like offset some of my taxes. Well, that's why I got into real estate, and I really wanted to dive deep into commercial real estate. So after trying to scale in the residential side, it just did not work out that well. Met a few partners in the multifamily side, and we kind of just headed off and kept going from there. So, yeah, I mean, we're literally about to close on another 419 unit here in like 30 days. So it's been, that number will be over 200 million here soon. So.
Yeah, that's great. Thanks for sharing a little bit of your journey. I just have to ask the question because you mentioned that you're currently still in a tech sales job. And I'm not sure that you know this about me, but I spent almost 25 years in the technology sales space myself and literally just stepped off that hamster wheel last week.
I know.
The recording of this, thank you. The recording of this conversation, I stepped off that hamster wheel on Valentine's Day, February the 14th. So would love to hear a little bit more about maybe kind of your journey in tech sales space and what specifically was it about real estate that, caught your interest way back when, and why you felt as though you were going to, essentially start up a side hustle where you're investing in real estate while at the same time, managing, I'm sure, a lot of time really spent in on your tech sales job and grinding those quotas.
Yeah, it's been a interesting journey to say the least. So I've been in about 20 years in tech sales, right? So started out as a entry level, banging the phones, trying to get as many appointments set as possible, kind of like boiler room style. You set up a meeting or you lock up a deal and you ring a gong and that kind of stuff, right? So I mean, it was really like kind of throwing yourself into that immersion and really kind of figuring out that you can't, if you get rejected, you got to move on, right? So I think it really built such a really thick, tough skin and almost desensitized me to like failure, right? Because I just had to keep pushing on and move into that direction. So fast forward, I was in that job. I've only been in two jobs my entire career, right? Out of college, went to Virginia Tech after I graduated. I was in that first job for about 11 years, and then I moved. I'm almost about to hit my 10-year anniversary, my current job, I run a cloud business. Um, and so from there, yes, I am W-2, but I'm able to have a flexible schedule. I've got a really solid group of customers. I can really diversify. I've got a team that helps support me. So I think what I've learned the biggest over was putting together the right people in the right place to be able to help um, grow business in the technology space. And then I kind of just applied that over to the real estate side too. But what got me into real estate is, I love just, I don't know. I've always been obsessed with real estate. So from buying my first townhouse, and I think I told you this story earlier. I was actually thinking about it. I'm like, my first rental property I bought was actually in 2017. But the first house hack I did that my wife and I didn't even realize that we were house hacking at the time was back in 2011. Now we bought a house, we fixed it up, and 18, not even 18, 15 months later, my job said, hey, can you go move, states to this, to run this other office of ours? And I said, okay, cool. So we had to sell our house and we ended up making a profit on it, which is nice. Um, so through all of that, I really just became, enamored with wanting to grow a real estate portfolio. Plus, I mean, there are some really amazing tax benefits, right? When you have a real estate portfolio. And my wife's our real estate professional. She's a stay-at-home mom, but she manages our portfolio, manages a lot of stuff for our side. So we're able to really adhere to the tax benefits from that side as well too, which is amazing, right?
Yeah, Jeff, it's remarkable to me how similar our stories are. Even the time that we got invested in the beginning, in real estate and kind of that trajectory that both you and I are on, including the fact that my wife is also a stay-at-home mother and
Yeah,
spends at least 750 hours per year, managing our active real estate portfolio so we can claim, that reps status and benefit, on the tax side of the house. So
yeah.
really appreciate you kind of sharing your story there. I know that you've successfully deployed over $40 million in equity. What strategies have been most effective in raising capital and building investor trust with your network?
Yeah, I think the thing that I look at the most is relationships, right? Just in sales alone, like building, this right for being 20 years in business yourself too, is if you can establish and connect with a person on a personal level and build that relationship, that is what takes you to the next level with them, and that's that first part of the know, like, and trust, right? First off, you got to know the person, then they got to like you, right? So you got to be personable, you got to be able to you know, have some social skills, right? And then they got to like you, or they got to trust you, right? So building those relationships is what I've always done in my entire career. So just taking that and moving it into an investor relations perspective for raising capital it's kind of come naturally to me. Um, Now, I'm not going to say that raising capital is easy because you know that it is not an easy endeavor by any means necessary, and fell flat on my face the first time I tried raising, and just learned from here, from keep on grinding, keep on finding the right investors, and we've been lucky to well, I say lucky, but I don't really believe in luck. I believe in opportunity. Beats hard work. You create your own luck. But we've had the opportunity to be able to meet some really phenomenal people over the last 24 months. We're really starting to dive into some relationships with some family offices right now that are partnering with us on opportunities and deals and bringing some capital in and finding different creative ways to close the deal, right? So that's been really exciting. But the most important part is the know, like, and trust, right? If you can get to the point where that person trusts you with their capital, because we are stewards of their money, right? We are stewards of their hard working money, right? So if I could be a fiduciary, which is what we are basically when we say, hey, invest in this syndication, this 506C accredited only status syndication, and we will treat your money like our own money. And I do that because I invest in every single one of my own deals also. I think that's a very important part that sponsors, some sponsors don't do, is they don't invest in their own deals. And if you can put your money where your mouth is, then you can definitely, accept investor money.
Yeah, it makes total sense. That trust is incredibly important, and I always say that we build, trust one drop at a time, and we lose it in bucketfuls. And really appreciate your perspective on understanding your fiduciary responsibility of protecting and preserving, your investors' capital. I know that you're involved in a number of different, asset classes, across multifamily, luxury single family homes, development, industrial properties. What specific what made you decide to focus on those specific asset classes? And do you have one or two of them that are stand out more than others?
Yeah. So when I first got into real estate, I wanted to just buy single family rentals, right? So that's how I started in the single family rental space. I mentioned earlier that I got into private lending. So I took my old IRA from my first job, transferred over to a self directed IRA. This is probably going on about 10 years ago. I did this and started lending that out to investors. And I'd vet the deal, I'd underwrite the deal, I'd collect it, they'd pay the monthly payments and so forth, and so I got really interested in that private credit space. Instead of being very active in there, what I do now is I invest a bunch of capital into a hard money lending business that does that for me, right? So that was the first thing. And then, as I am moving down this path of transitioning from single family, now I realize that private lending, now I really want to get something that's going to scale my portfolio and provide those amazing tax breaks, um, or tax benefits. I really looked into multifamily as our main key source, right? So value add multifamily has always been and will always be our factor, or like our main asset class that we invest in, right? And as we've grown from that way, we've met different partners who have introduced us to ground up development. So we're developing a deal to actually we're developing 3 deals right now in St. Petersburg, Florida, for a total of 370 multifamily Class A multifamily units. Um, so it's been amazing just to kind of go through that transition to figure out what it takes to be a developer in real estate. Because if you think about it, yes, buying value add multifamily is great, but developing it is where true wealth and true very big wealth is grown, right? Now, I know I kind of spoke a lot there, but the most important thing to factor in is that I wanted to diversify my own portfolio, in these different asset classes. So as I'm kind of going through this process of, finding expert operators in certain deals and partnering up with them, we found expert operators in the value add, and now we are expert operators in value add. We found an expert operator in ground up development, and now we are going through that process to be expert operators in ground up development. We also found an expert operator in the light industrial. So we purchased our first light industrial warehouse in Charlotte, North Carolina back in June. We're already under contract to sell that property. So we'll have our first exit in the industrial space coming up here in about 30 days, which is very exciting. And currently working with another team to do a ground up development of Flex Industrial. So again, I say all this because I personally wanted to diversify my own portfolio, and really it's about creating multiple streams of income, right? Because having your W-2 is kind of like my anchor, right? That's where the funnel starts. That's where the money first comes from. Now, I don't want to just have one source of income. I want to be able to branch that off and do multiple streams, right? So having ground up development or having value add or having light industrial creates that diversification inside my portfolio, but also has different exits, different prefs, different returns, different time frames, right? Some are, like I said, 6 months, and some are 5 and 7 years, right? So it provides a really good growth pattern for me to be able to, be able to really put those multiple streams to work for myself and be able to, eventually maybe offset my W-2, which, I have no reason to do that now. And I don't want to do that now because I love both jobs I do. But it gives me an opportunity to be able to then use my passive to be able to keep investing and pay for all my bills or whatever, right?
Yeah, no, I appreciate that and appreciate your kind of breakdown of why diversification, is really a prudent approach. And, there's going to be some investments that are going to have a higher risk profile than others. There's going to be
Yeah.
some investments that have, a greater equity upside at the end, whereas others, maybe it's a higher cash flow, on the front end. So I think it's great that you're not just talking the talk, but you're walking the walk out there in terms of what you recommend that prudent investors do, and you're doing it yourself. I'd love to know about maybe some of the challenges. Real estate isn't always a great place to be. So
Yeah.
I would love to know a little bit maybe more about any, challenges that you've faced, as maybe a passive investor or as an active operator, in the asset classes that you're invested with, and, how did you maybe overcome those challenges?
Sure. So starting off in the LP side, so I invested in a deal out of down in Texas that had some rate caps, right? And the rate caps kind of expired, and so now the property is kind of struggling a little bit to be able to get the back into a more solidified debt terms. So that's kind of been a kind of an eye-opening scenario, right? That it was purchased. With different caps that expire or they cost a lot of money for those rate caps, right? And then the debt can float pretty high. So we saw that as okay, we need to take notice of that because that we know that there's the three most important things or three most expensive things in a property is your debt, your insurance, and your taxes, right? And so if we can alleviate one of those, right, maybe we get a tax abatement on one property, we can maybe bundle insurance quotes together for another property, but the debt is the most important thing. We've been able to underwrite all of our debt with fixed rate, which has been great. Whether it's a bridge loan or it's an institutional debt, being able to kind of see those challenges that I dealt with in the LP side and bring those into our own portfolio has been critical. And then another one, Jeremy, is partnerships, right? I mean, it's difficult, right? Because if you don't have the same vision with like a group of partners, and let's say there's like a handful, like 4 or 5 partners on a companies, right, and together that come in and form a syndication and move forward. You're not aligned in the business, then it's kind of like that old saying in high school, like if you jump into a team and or into a group project, and some pull their weight and some don't, right? You have to figure out how to overcome that scenario. So we're dealing with that in a couple of things, but in every way, shape, or form, like our group is the one who really comes in and spearheads a transaction, make sure that we're really focusing on how to overcome any of those issues, work with our teammates, work with our partners, and really implement our business plan true to what we've expressed to our investors.
I'm Zach Captainstall, CEO and co-founder of Rise 48 Equity. Our goal is to help you protect and grow your wealth by investing in large multifamily apartment buildings. We do all the work as far as sourcing these large apartment buildings from the brokers, doing all of the on-site management with our vertically integrated property management company, doing all the renovations with our vertically integrated construction company. We completely rebrand the exteriors. We will renovate the interiors to our full platinum level scope, which increases the value of the asset to get that profit margin for the investor. If you'd like to learn about how you can partner with us on these exciting opportunities, and go to our website and set up a call with our team.
Yeah, that makes total sense. And I appreciate you kind of breaking down, one of the most significant challenges in the space today, has to do with the increased cost of debt service on some of these properties that maybe were acquired, at the peak of the last real estate market, and second to that, the power of relationships, right? Incredibly important that, people, choose wisely in that area. And sometimes, unfortunately, you don't know, whether or not you're entering into a relationship with somebody else, that's going to provide value, to the team. So certainly tread, lightly and carefully in that regard.
Yeah.
What would be, I'm just kind of curious on the investor relations side, which is incredibly, important for an active operator in the space.
Yeah.
What would you say are some of the kind of the key factors that separate, a great investor relations strategy from maybe one that's just average?
Yeah, I think it's being upfront and honest, with any of the issues that could come up with the property, right? There's a lot of unforeseens when you buy real estate, right? Just like opening up that wall, there could be a can of worms in there, and you don't know what that's going to be, right? So um, we pride ourselves on communication, right? So I think over communicating with our investors, making sure that we provide newsletters with pictures. We're actually putting together a video newsletter for one of our development projects to kind of keep people up to date with what's going on there. We normally do monthly newsletters to start, and then once we transition to stabilize, we'll do into a quarterly newsletter. I guess it depends on the property too. Some are quarterly, some are monthly. But usually I think it's the most important thing is providing that the transparency, right? So what's happening, right? Is there any issues with the current property being upfront and honest with the investors because it's their property too, right? I mean, when they're investing in one of these deals, they're buying into they're buying shares in a company, right? So you gotta treat everybody with the same respect, and they should know and they should see what's happening. Because again, if you don't, right, do that, and a year goes by, and all of a sudden you tell everybody, "Hey guys, we got a capital call. Everyone needs to bring some cash in." They'll be like, "What? What? This is the first I'm hearing about. Why haven't you told us about this?" Right? So, I think the most important thing is being upfront and honest with everybody.
Yeah, it makes total sense to me that transparency and that level of communication really helps to drive,
Yeah,
that trust bucket, with investors. And I really appreciate, you highlighting something incredibly important, and that is depending upon how the deal is structured, those investors are owners, right?
yeah,
So treat your investors like they are owners, which they are. And that obviously includes making sure that they're, aware, or at least have visibility to how things are going, at the property level, including the financials.
that's true.
Yeah, and I also appreciate your perspective earlier on, regarding this kind of concept of transferable, skills, failing forward, getting your teeth kicked in, so to speak. All of that to say, what advice would you give to other aspiring operators that are looking to scale their own real estate businesses?
Yeah, I think the most important thing is to meet people, right? Go out there and meet different partners, introduce yourself at conferences, set up a meeting with them to ask how you can help add value to them. So that way they can, in return, provide value to you and teach and help train you. We've taken a few handful of folks. We don't really have a mentorship program, so to speak, but we have like a credibility program, right? That we help bring people who don't have that background, right? We'll help them create their full business structure, LLCs, website, marketing. We'll do webinars with folks to help kind of bring them into our partnership, our ecosystem, and learn from doing, right? Because if you're anything like me, Jeremy, I don't learn by reading a textbook or watching somebody else's video. I learn by actually doing it, right? So getting on a call with an investor will teach you how to raise capital. Underwriting a deal and going through the underwriting formulas will help you learn how to underwrite a property, right? Or how to review properties and so forth, right? Being on those GP calls will help you learn how to asset manage and how to be a part of a team that can help, transform this dilapidated or this undermanaged, underutilized property into a shining star of the neighborhood, right? So we bring people into our fold, right? We help them create their business, create their structure, create their opportunities. I help raise capital with them, and we bring them into our team, right? We bring them into our team and show them undercover, how to do that. And I think that's a very important thing. A lot of people don't do or don't want to do, and we do it because it's someone did it for me, right? Someone helped me where I'm at. So if I can help other people learn how to do and be a part of the industry, it only grows our partnerships, our trust, our ecosystem even that much better.
I'd like to ask you a question that I have been asked myself hundreds of times in the last 2 years. And that is, Jeremy, how is it that you can work a full time W 2 job, crushing commission checks, while being a full time real estate investor, while also trying to be the best husband and father you can be, coaching hockey and traveling to lacrosse practices and games and all these things, which I know you're also involved with. So I'm going
That's
to
right.
ask you the question, how is it that you're able to balance both your personal life and your business life?
Yeah, it's definitely something that I've been mastering, and I'm still not the best at it, but I continue to try to strive and be better every single day. I wake up early, so I get up before 6 a.m. I'll go to the gym, right? So I try to get my workout done early. I know some folks who go work out at like noon or sit in the evening. I just can't do that. I got to get up early, go to the gym, get my coffee in the morning afterwards, help get my kids ready, pack their lunches for school, get them off to school. So I'm there every morning with them. And then I figure out what is my plan for the day. What do I need to tackle? What kind of tasks do I have? And I set up block scheduling. So I basically block schedule myself, right? I have this task I have to do for my W-2. I've got this task I have to do for my real estate business. I've got this task I need to do to go, for my family. And then afterwards, and my wife is very good at making sure I do this too. But gotta put down the pen, right? Gotta get out of the seat, right, and go, be a dad and be a husband after 5 o'clock, 5:30. Go help with dinner and bring kids to practices. And like I said, yes, I am. I also coach a travel baseball team, so that's going to make my spring here very, very busy. We have 8 tournaments we have, which is basically, it almost takes up every weekend. And then I've got 2 other kids that are in competitive sports too, swimming and cheerleading. So, being able to manage all that has been tough, but it's rewarding. That's to say the least, right?
Yeah. Yeah. And you definitely have to be intentional, with that time and really, focus in on what are those highest and best activities.
That's right. That's right. Yeah. And one thing too is creating those multiple streams of income kind of eases it off a little bit too, where I know that I can, if my 1 week, maybe it's a little less on the sales for IT side, I got more coming in on the real estate side and vice versa. I can kind of offset them. But I've also created a pathway for folks who haven't really understood how to do that, right? And how to utilize their W-2 to create passive income for themselves. And Jeremy, I've got this awesome guide that I love to, share with your audience if that's okay. And
yeah, please.
Yeah. So basically, if you go to our website, which is valoriscapitalpartners.com/next level. And right there, you can sign up for our guide. It kind of shows you what I've done in my own portfolio of how I've created multiple streams of income. And it anchors from your W-2, right? And it also brings in, like we talked about already, brings in passive income, or it brings in private lending, it brings in syndication, it brings in private equity, it brings in real estate, different real estate ventures, whether it's a short-term or long-term rentals. And one thing that we didn't talk about, which our friend Chris Larson is a big fan of, is using whole life insurance policies, right? So I'm very big on structuring my entire organization around trust and life insurance policies to be able to use those to really, arbitrage, right, opportunities. So I know we can probably get into a whole nother 45 minutes of that, Jeremy, but I'll leave it there if that's okay with you, right?
Yeah, no, I appreciate that. Just as we kind of wrap up here, what would be maybe 1 or 2 different ways that our listening audience can connect with you offline to learn more about what you're up to?
Yeah, the best way is for LinkedIn. I'm very active on LinkedIn. So it's it's linkedin.com/ I think it's Jeff-Ervick, Ervick. And you can find me there. Valoris Capital Partners is there as well. And those are the 2 best ways to find me. Yeah.
Hey, Jeff, thank you for providing tremendous value to our audience today.
Awesome, Jeremy. I really appreciate the opportunity to be on your podcast, and hopefully one of these days soon, you and I can do a deal together as well.
Likewise. And listening audience, thank you again for joining another episode of The Freedom Point. We look forward to having you join us on the next episode.
Thank you for hanging out with us today and for listening to the Freedom Point podcast, powered by Starting Point Capital. This show is for entertainment purposes only. Nothing said on this show should be considered financial advice. Before making any financial decision, please consult with a professional. This show is copyrighted by the Freedom Point podcast. Written permissions must be granted before syndication or rebroadcasting. If you're interested in connecting, you can find contact information at startingpointcapital.com.